Good morning, everyone. I'm Shrikant Chauhan, technical analyst of Kotak Securities, is welcoming to all of you on our today's session, which is on how to use technical analysis and to make the most of Budget 2014. I have spent nearly 12 years with Kotak, and I'm in this profession since last 15 years. Whatever the basic knowledge that I have, I will share for the first session, which is on how to use technicals, the basic knowledge about technicals. In our first part, we will cover how to use technicals. In our second part, we will cover say like what should be the trend before the budget and pre-budget and post-budget for the market based on technicals. And in our last part, I will go through with few questions which are there for me. You all, friends, you all must be wondering that what has convinced us to conduct today's session. And there should not be any guess because it's a guess that advanced technology has changed the stock market dramatically. Advanced technology is chasing to the stock market. In fact, we really don't know like who is chasing to whom. But one thing is very clear that advanced technology has speed up the stock market activity dramatically. There is like a lot of activity in the market. People now have started exploring. They have stopped following, but to follow but to explore stock market activities, especially for stock market activities, we need to take some decisions. And to make it easier, to make it simpler for all of you, we decided to conduct such type of presentations to help you by the way of such type of presentations, and we will make you confident that you can take decisions based on whatever the things that you are exploring for the stock market. So uh, I think very first, which is like on which we are targeting today, is the basic knowledge about technicals, and I will go through with the presentations that I have. I'm very much say like confident that you will all gain from this particular presentation. There are like certain rules and principles which we have to follow while understanding the technicals or while following the technicals. The first and foremost rule is that technical analysis deals in probabilities, never in certainties. What it means? It means that we have to act on number of probabilities, and we are saying that nothing is 100% right in the world. So it means that for everything there is some strike ratio, there is some success ratio, and if we have to go and we have to work on this strike ratio, then it means that we have to work on probabilities. So just keep one thing in mind, one thing from the mind, that if you are using technicals, that it does not mean that each and every trade that you will get success in that. So just keep in mind that technical analysis is the game of, it's a deal of probabilities. The second and the most important rule is that follow the series of rising top, rising bottom. Um, Again, for this, my basic uh, uh, guideline to you, to all of you, is that if you stick to this particular rule, that follow the series of rising top, rising bottom, or falling top, falling bottom, it means, in brief, keep in mind that trend is your friend. If you stick to this rule, I'm very much sure that 50% of the overall analysis work is done. It's done for you. So follow the trend, trade accordingly, and I'm very much sure that you will make money. See, these are the important things which we have to keep in mind before understanding the technicals. And even if you want success in this market, if you want to trade, if you want to invest, you all have to focus on these rules, which are very, very important. And I'm seeing that most of the time, most of our traders and investors, they don't follow to this very simple rule. The third one is also relating to the first one and the second one. And the rule is never be a contrarian while trading. See, here I'm mentioning especially never be a contrarian while trading. Never try to hit bullseye. What it means? It means that if you hit a bullseye, then it gives you a tremendous confidence. And always in the stock market, if there's overconfidence, then I'm very much sure that it ends up with, or it will end up with, a lot of pain. So be a steady, be a gradual trader, winner in this market. Don't try to be a contrarian, especially while trading. Yes, you can take contrarian view when you want to invest in this market. Like some few months back, there was clear-cut sell-off into all technology stocks, in spite of having any fundamental changes. But still, the stocks were available at important lows, and from there again they recovered, and they have given almost 8 to 10% return, even in such sideways and steady market. So, if you want to invest, certainly you can take contrarian call, especially on frontline stocks which are there in the market. But while trading, just stay away. Unless and until there is a reversal activity, don't go for any contrarian trades. The the next one is manage your money, which is also very, very important. And please keep in mind that it is not casino. It is something which is a professional center. You have to treat whatever the money that you have as a god, as a Lakshmi, and you do not allow it to go completely. So never allow it to go completely. What I mean to say is that again, you have to act on number of probabilities. So use your money accordingly. You act on each trade. You try to act on each trade, and if you want to act on each trade, then you require that much fund. So allocate your funds accordingly, and then you trade in this market. Even if you want to trade on, say, like any inside info, then also my suggestion and our suggestion is not to put full of your amount on any one specific trade. So treat stock market as your profession, which is very, very important, because most of the time what I'm seeing is that I want to make money from the market. Yes, the basic goal is to make money from the market, but for that, if you want to make money everywhere, anywhere in the part of the world, then you have to be professional, or at least you have to follow some rules and regulations. And if you're just gambling, if you want to play the, say, like bullseye kind of thing, then it is better if you go in casinos. These markets are like more for those who are following to rules, who are following to some principles. And I'm very much sure if you follow these rules, you can make lots of money in this market. The last but not least, and what is that? The last rule: never forget given rules. So these 4 5 rules are very, very important. Keep this in mind, and I'm very much sure that it will change your life if you want to trade or invest in this market. Now I will move on the technical part of this session, and there are like see, I am covering here few those questions which are relating to the technicals, and where the people makes most of the time a lot of mistakes. So if you want to trade in this market, then the very first and important thing is to get the answer on what is a trend. So unless and until you are not knowing that what is the trend, you cannot trade in this market. So what is trend? It's a directional movement of prices that remains in effect long enough to be identified and still playable. If a trend is not identified until it is over, we cannot make money from it. What it means? It means that you just follow the, you just find out that whether the trend is up or down or sideways. Simple. It is as simple. If it is up, then whether it is following the series of higher top, higher bottom or not. If the whatever the instrument is into rising top, rising bottom series, then we can confidently say that it's an uptrend for the market. And the best example is Bank Nifty. If you go through with the trend of Bank Nifty since August, then you can see that it was into a rising uptrend, and after the result of election, it was into sideways consolidation. Sideways consolidation is always continuation formation, and because the basic trend is bullish, we are of the view that it will break on the upward side. But till the Bank Nifty is not crossing that particular barrier of 15,750 or 15,800, we should look it as a range bound activity, and unless and until it is not closing above the level of 15,750, we cannot enter heavily long on Bank Nifty. So what it means that in with the example of Bank Nifty, we can understand that currently it is into sideways activity. That means the trend is sideways. I will go through with the typical stock market behavior or cycle. Everyone knowing this, but the thing is that it is very important, or it will be much more helpful if you go through with this particular slide. And you can see here is that, like, either it is uptrend or downtrend, but here we have taken first declining trend, and it is always follow some channel. So you can see here there is channel, then it takes support somewhere, it's a reversal. So that is why we have mentioned here is as a buy point. Later on again there is a upward trend, and you can clearly visible, you can very clearly see, notice that the line chart is showing rising top, rising bottom behavior. So that means the trend is up. So it's a rising channel, it is following to the that particular price channel, and we are going to cover these channels and trend lines in the later part of this session. After reaching to certain levels, then the market forms peak, sideways trend for the market, and instead of say like continuing to the upward, because already we have seen a huge run up in this particular whatever the price pattern, and after this flat or sideways pattern, again we are seeing some correction. Again it is also following the channel, and then again one more bottom. So broadly what it means that the markets are always cyclical. It goes up, it goes down, and because we are uh, into emerging markets territory, we should always look for adding good quality stocks, top corporates at each major supports, because we are going to see much more better things for the stock market, for the Indian market, for the Indian economy in next coming so many years. So be a select buyer on each dips, on each major dips, and be invested at least for next couple of years. So after this, what is trend? Now we will go on how are trends identified, and that we already discussed that it is very simple. For that we have to find the series of higher top, higher bottom, or lower top, lower bottom. If you can find out this much, again it's a 50% work that you have completed. And I have taken one live example. It's a chart of Tata Motors, and you can see here that the stock has followed rising top, rising bottom. So wherever you enter, you just see that whether the stock is following this rising top, rising bottom behavior or not. Once here, the stock has broken in the year 2011, broken the major support. You can see here, we have seen a quick sell-off in the stock, and ultimately it moved to the next support level. Again, the stock has formed rising top, rising bottom series, and ultimately the stock is at 425. A lot of our customers, clients, they want to know that what is happening in Tata Motors, and we say that it is into long-term uptrend or long-term bullish trend. But behind that particular answer, it's a very simple analysis that it is following a rising top, rising bottom series. So we have like number of examples. The next one is lower top, lower bottom. It's a chart of BHL, and everyone knows that it was at somewhere around 1000. From there, it fallen to 100, 125 levels. Again, here also you can check. It is following lower top, lower bottom series, and ultimately it went to the levels of 125. And here specifically, if you can see, it has never crossed its previous top. So it was into strong downtrend. Currently, again after the reversal points and huge volumes, the stock has reversed from lower levels. We will move on the third slide. What is trend line? How we can draw it on charts? I think you all are must be say like questioning to yourself that we know all these things. Why we are going through with this basic things? But let me tell you one thing, that these are the only basic things which with you can make money. And most of the time I have seen that because the people want to go into some lot of new things, number of oscillators, number of other price theories, and because of they ends up with a lot of chaos. So instead of being a chaotic in this market, just follow the simple principles, and I am also following the same principles to give trading calls, to give investment calls. We will cover one more session in next, say like few days of time or few weeks of time, in which we will cover few advanced strategies, but they are always linked to the first part of this particular session. I'm going to say the basic technicals. So basic technicals is important, and that is why what is trend line, how we can draw it on charts. We can call it as a demand line or supply line. I think the best way to put it, trend line, is as it's a demand line. And I will go through with few examples. You will come to know. It's an ancient tool. If there are number of touchings on the trend line, then it works like a, it works like a strong tool to identify actual reversal in trend of that security. So if there are number of touching, that means the that trend line is strong, or that particular trend is accordingly very strong. You can see here the examples of the example of uh, one bank stock, that is PNB, and you can see over here is that it's um, a bear trend for the stock. The stock has formed number of times lower top, lower bottom, but it was inconsistent in that. Uh, and if it is inconsistent, then what you can do, you can follow trend line, and you can check here is that after hitting this two times particular trend line, next time the PNB clearly failed. And I have observed in the past and also in the recent times that after say like hitting two times, if any particular stock or any particular instrument hits to that particular trend line for the third time, then after that we come across with a quick sell off or quick crash in that particular stock or in that particular instrument. And it's a best example over here is that after hitting the third point, we have seen a quick sell off in the stock, and on the dismissal of trend line we have seen a reversal in the stock. It was at some 650 kind of levels, and from there it moved to 1000. So only on the basis of trend line you can make out a lot of things. It's an example of Syntex. It was into strong uptrend. The stock moved from 80 to almost 300 in the year 2008. And after breaking this particular rising trend line, which we call as a demand line, after hitting this, breaking this trend line, we have seen a quick crash. And why this particular example is important is because the stock has touched this trend line number of times in the past. And then after that we have seen again a lower top, lower bottom series, and finally it into extreme levels. One more example of Tata Motors, and again you can check the stock is continuously following to the trend line. After breaking the trend line, it went to some bigger supports, but again the stock made up, and now it is into one more rising trend. It is following trend lines, and you can check over here is that it is changing the angle. What I mean to say is that it will now speed up its activity. In the near future, we can see a strong up move for the stock because it is changing its angle. It is going step upward. After these trend lines and identification of trend, we will move on what is price chart. See, it's a complete activity of the price that moves in the given period, which we can extract. What I mean to say is that if you are following a daily pattern, then open, high, low, close is important of that particular day. If you are following weekly pattern, then open, high, low and close is important for that particular week, and accordingly for similarly for monthly patterns, quarterly patterns and yearly patterns. So what is important? It is important to extract open, high, low and close of that particular instrument, and whatever the rest studies are there, they are depending on the basis of the overall these four aspects of the price. Then in price chart there are number of things to say like follow. There are a few other tools like line chart or bar chart, but we prefer candlestick pattern because it involves say like emotions of the stock market. It is a very popular theory that most of the technical analysts and the community follows, and it's my say like request to all of you that to please go through with the theories of candlestick if you want to understand technicals in depth. It's a Japanese theory, and it's a the most ancient theory to understand the stock market, to understand the emotions, to understand the overall the pattern of the stock market. And I will go through with few examples, but they are like if you just go through with these few examples, then also you can make a very good say like money on your trading whatever portfolio. So candlestick is the important theory on which we are focusing today. There are a number of say like uh, names and number of formations in candlestick, but the most important and the strongest formation is hammer formation. Hammer itself suggests us that hammering, that means what, someone has hammered something. So if it is an inverse hammer, that means it's an inverse activity. So if there is a selling pressure, then someone has absorbed that selling pressure. And if say like if it is a straight hammer formation, then it means that someone has absorbed the whatever the buying pressure, and it reverses the overall uh, uh, trading pattern of that particular instrument. So it's a first example is that inverse hammer, and you can see here that after forming this particular inverse hammer, the stock has changed, the index has changed its direction, and from 5100 it went to almost 6200 levels. So these formations are uh, so effective, and you all have to focus on these formations. I will cover few more formations in our next session, but if you just go through with these formations on any chart, which is any packages or technical packages which you have, or also you can go on a few websites like BSc, NSC, there they have also candlestick pattern and candlestick price theory. So you just go through with that, you will see if you see this kind of formations, then be careful and trade accordingly, because these are all reversal formations for the price for the that particular instrument. One more example here, Aurobindo Pharma, which is the uh, strong multiplier in this market. It was at some 140 levels, and from there it moved to some 700, 800 levels today. The stock has formed some inverse hammer formation. It's an inverse. I mean to say it's a reversal formation of the in the downtrend, and from there we have seen a quick expansion from 140 to almost 200 levels. Here it is, if you can see. It's uh, it's a straight hammer formation, uh, and here you can see is that the hammer formation along with huge volumes. That means it is much more effective, and if the volumes are there along with the hammer formation, then it's a golden formation which you can follow for your trading purpose. So one more formation is there for inverse. Recently, Bank of Baroda has formed hammer formation at the top of 1000, and from there we have seen a decline to some 800 levels. The next one is moving averages. It's a best tool to identify the trend or momentum of the security. In the past, it was much more popular, but nowadays we use it as to understand that whether the momentum is on or not. But for beginners, I think moving averages is very important tool to understand. We like 20 days simple moving average. We follow simple moving averages. Uh, it's a very simple that it's a price of last 20 days. We add to those 20 days prices, closing prices, and just divide it by 20. So whatever the answer that you get, you just keep on adding to that to your line chart, and you can form a moving average line. So, as per our experience and observation, 20 days simple moving average, 50 days simple moving average, 100 and 200 days simple moving average are most commonly used in the stock market. Most commonly used from these four averages is 200 days simple moving average, is because it's activity of whole year. It's activity of last 200 trading days, and uh, whatever the queries comes to us from institutions, from big FIIs, they always ask for what is the average of 200 days. What I mean to say that they are not always um, focusing on the short term. They are focusing on the long term, and that is why they want to understand that whether the average of last 200 days activity is below the current price or not. And if it is below the current price, that means the trend, whatever the trend of that stock, is strong. And if the market breaks that 200 days simple moving average, that means something is wrong, or someone has taken active interest to get out of the stock. So 200 days simple moving average is very, very important. I have seen that most of the time a lot of people they use exponential average also, but as we are always focusing on simple strategies, it is better to follow the simple moving average of 200 days. Then there is golden cross method also, which we will cover in our next session. But golden cross is nothing but it's a cross of two averages, 50 days to 200 days moving average. We mean to say short term average is cutting to the long term average, and if that particular crossover is there, then we can see a good up move or this strong up move for the stock. And here you can check is it's an example of JP Associates. um, in the year 2012, it has given negative crossover at a certain point at 80, and from there we have seen consistent sell-off in the stock. It has given a bullish crossover in the year 2014 in the month of some May, and you can see from 45 the stock is currently trading at 70-75. So these are the few principles on which we can we can use those principles, and we can make most of it. It's a one more example, and you can see arrow over here. It's an example of State Bank. It has given bullish crossover at 1750 1800 levels, and currently the stock is trading at 1700. So if you follow these few principles, then also you can make money, but you have to be consistent in following all these rules. So moving averages, trend lines, and identification of trend. These are the four important rules principles as well as the things which we have to keep in mind while uh, attending to the technical analysis or while using technical analysis. So uh, the important part is that technical analysis does work. See, we most of the time, a lot of our customers, they ask us that whether the technical analysis can make money for us or not. And the simple answer is that yes, because it gives us the idea that when to capture profits and when to get out of the stock, which is very, very important. See, I'm not saying that if you follow this, you will make money. If you follow that, you will make money. But if you can identify the trend, if you can identify few things, and if you follow them, then you can restrict your losses. You can ride your profits. And riding profits, restricting losses is itself that you are making money for yourself. You are making money for clients. And so technical analysis works, but what is important? It requires work. It requires work to make it work. What I mean to say is that we have to devote time on it. Just give 1 or 2 hours. Just be dedicated to the analysis. Give some time to the technical analysis on a day-to-day basis, and I'm very much sure that you can make a lot on it from it. Then the last remark, which is very important, is that we need to study the past technical analysis, the data of last several years. That can give you a better edge to understand the overall trading patterns. So here we have completed the first part of this session, that how to use technicals and technicals, and now we will move on, make the most of budget. See, like a lot of people, a lot of our clients, our branches, they are eager to know that what will be the, like how the market will behave uh, before and after the budget. We are very close to the budget, and I think the simple thing that we have to keep in mind is that market is into extremely bullish formation. It is into extremely bullish trend, long-term trend. Uh, it is very simple. If you just keep this in mind, budget, no budget, it is not going to make any difference. But because there is like a lot of curiosity to know about the budget, and because we have tools to understand like how the market will behave, we will go through with few things. And the first one is that what should be the range for the market before the budget. So the range that we are seeing on the charts is between 7,400 and 7,950 or 8,000. So we are expecting, because see, most of the things are priced in right now, and anything extraordinary that comes in the market, then I'm very much sure that uh, you can say like see the markets beyond 8,000 levels. But it does not mean that after hitting 8,000 the market will come into strong selling pressure. It's not like that. Even if something goes wrong in the budget, if some any tough measure comes, or if the finance minister doesn't say like give any say like leeway for the uh, STT. And because of that, in case if the market corrects, then it will be just an excuse that FIs will use, because they are looking at the reform process which is there in the market, which is there for our Indian economy. And in case if because of this the market falls, our advice is to just use that fall as an opportunity to add more and more long to your investments. Uh, then the next part is that which are the stocks or sectors they can do well. So here, uh, whatever the manifesto of the ruling government and whatever the requirements which are there for the Indian economy, Based on that, we would say that we can expect a lot of activity from banks, from capital goods, and from uh, infra space. We have seen a great amount of activity in pharma stocks, but they are completely into different orbit. And I'm of the view that uh, if you want to invest for a longer period, you just keep on adding pharma and consumer durable stocks to your portfolio with a long-term view, because they are completely into new territory and they are going to give steady returns for a next number of years. So we stick to these two sectors on a regular basis. Because of any reason, if market falls, without failing, just without any hesitation, just add on to pharma and consumer durable stocks. For IT and for FMCG, we have view that they are going to remain in a trading range with a positive bias. So, if there is a fall because of any reason, we have to wait. We have to see that whether they are where they are stabilizing, and after some say like stabilizing kind of activity, we can again enter into it with a positive bias. Positive bias means what? They are going to remain in the uptrend, but with a trading, and they are not going to outperform to the broader market of the broader sectors like capital goods and infra. But the risk is very less, and you can always take a lot of trading calls, trading opportunities in this two sectors. Now we will move on the post budget, like what should be and what will be the trend of the market after the budget. So that already we discussed that whatever the excuse that the FIs will take after the budget, you just use that an opportunity to enter into some few sectors, and the lot of clarity will also come that where the government, where the finance minister is putting more weightage, and accordingly we will come out with the idea that where we have to focus much, where we have to over leverage ourselves. But right now, based on the overall whatever the formation of the market, we are of the view that they are certainly going to give much more focus on PSU reforms, and if they are going to give reforms process weightage on the reform process, then it means that they are going to we are going to see activity, major activity out of PSU banks, PSU sectors. So PSU banks, no doubt, we have to keep on radar. We have to just keep on adding to them. And very simple thing is to just be with index frontline stocks or sector leaders, capital goods and all. But again, the stock specific activity will also come, and the best way uh, is to manage the next say like 12 months of period after this budget, or say like 6 to 8 months of period after the budget, this particular budget, each follow the top down approach. What it means of top down approach? It is very simple. Top down approach means if say like we are bullish on any specific sector, then instead of choosing one or two, just buy the basket, just buy all 4 5 top ideas or top companies of that basket and sit on it. We cannot again hit over here bullseye. So if you are very much conservative, you can say like buy, see if there is a capital goods space, there are number of stocks. And if you are much more conservative, then just keep a focus on index leader, that particular sector leader, that is Larsen. But if you are say like much more, if you are not conservative and if you want to risk, if you want to take risk in this market, then you can buy a number of stocks. You can buy even small cap, mid cap, as well as small caps from that particular sector. So uh, broadly, we are bullish on the market. We are seeing a market not to fall below 7,400 levels, above 8,000 levels right now. Based on technicals, we don't have any major levels. But in case if budget or in the budget, if we say like find anything surprising, then we will come out with new levels. In the long run, based on the multi-year breakout about 6400 levels, it was at some it was in the year 2008. So after consolidating for almost 4 5 years below the level of 6400, now the market has broken this, and it is above this particular level just by 20%. So we are of the view that the Nifty is going to double from here in next 3 years of time. It was at some 6,400. We are seeing 11,000, 12,000 kind of levels in the in next 3 to 4 years of time. which is great appreciation that we are expecting. That means 80% is still there to earn. So in case if there is any decline, just keep on adding. So with this, I have completed the first part, and the second part. You can always say like have if you have any queries, uh, then you can uh, follow us on Twitter, on Facebook. Uh, if you have any queries, then you can mail us on. So if you have any queries and any questions, then you can send us on our given email address, that is service.securities@kotak.com. I will go through with a few questions which people have asked, and there are like very common questions, and I will go through one by one. But the ideology is that uh, to take this question is to understand the field of clients, to understand the requirements of the clients in depth. So I will go through with it, but if you have any queries, then certainly you can send us your questions on service.securities@kotak.com. You can follow us on Twitter, on Facebook, and Kotak website. See, the first question is, and which is very common for everyone, is that which is the safe investment? My dear, I want to tell you one thing is that nothing is safe in this world. You have to take some risk, but certainly, like if you want to be a safe investor in this market, then better if you invest into, say, like mutual funds, or the best way is to keep on adding index frontline stocks to your portfolio. That can give you a better returns in the long run. Um One more question is there, that I'm a student, and I have say like 1500 rupees to invest monthly, on month basis. See, like with this such a small amount, you cannot make money instantly, or you cannot make money in the short term. But yes, you can make money in the medium term or in the long run. So, if you want to invest, just be a regular investor in this market. With this whatever 1500, you invest into any mutual fund, or you can buy any index heavyweight stock, and you can see returns maybe by the end of this year or next 2 3 years of time. But be a gradual, be a consistent investor in this market. See this market, and if you want to trade, see only trading can give you instant money, and for trading, any trader requires a lot of money. At the same time, he requires a lot of money management. So if these two things are there, then you can make money. If you have a very less capital, then better be an investor in this market. Even I have also started with a very small amount to invest in this market, and uh, today uh, my portfolio is buzzing, and a lot of investors which are there in the market who have make a very good money in this market, tons of money we can say in this market, they have always started with a small portion of the amount. So don't think that if you have 1500, that means it's a lesser amount, but it's a lesser amount for trading, it's not a lesser amount for investments. Okay, so just be a investor in this market, you can make very good money. Then one more question is there, and in that he's asking me that when the trend suddenly reverses, how to predict it? Uh, I think we have clarified that. What is important is to understand that whether the trend is really reversing. Uh, I mean to say whether the price pattern has formed any reversal pattern or not. What is reversal pattern? Lower top, lower bottom, or higher top, higher bottom against the previous prevailing trend. Whether there are any hammer formations, whether the instrument is trading below the trend line or trading above the trend line. So these are the basic things with which you can understand that whether the stock has changed its direction or not, has changed its trend or not. Um, then uh, uh, I think it's a very good question, and it is like how to stop loss. So it is a very small and narrated question that how to stop loss. I think see, like if you want to stop your trade, then follow whatever the instructions which are there for you. If you are trading in this market, then follow the trading uh, given stop loss for you. But if you are like following some technicals, you are in front of screen, then it is better if you use technicals as an entry point. And if that entry is not working for you, it is not coming in your favor, then just get out of it. Okay. So keep a time by stop loss. If you are not making money after entering into a trade, just get out of it quickly. And otherwise, you can follow stop losses based on the price pattern, based on trend lines, and based on some reversal formations, uh, and very stick to your stop losses, because most of the time what I'm seeing, what I'm listening, and what I'm hearing from my clients is that stop loss to ho jata hai. Okay, so which is completely wrong. uh, if you travel in say like aeroplane, or in say like by helicopter, then it is mandatory for you to carry parachutes. Okay. Similarly, if you want to trade in this market, if you want to trade in this market, then what is important is stop loss. Because in the absence of stop loss, you can lose a lot. The market can go to any levels because of any reason. So always first put your stop losses and then you trade in this market, or be stick to certain principles like time by stop loss or period by stop loss. So it's very clear that what is stop loss. Um, See, like there are a number of queries that how to deal in the how to deal with intraday markets. See, like there are like number of theories, a number of say like oscillators with which we can to whom like we can follow, and we can get a better success ratio. But and most of the advanced theories that we are going to cover, we will cover in the next session. Okay, but even if we are following this given guidelines, then also I'm very much sure that you will make very good money on intraday basis. Like on intraday basis, whatever the time frame that you are following, just stick to that time frame very first, and then you start using trend lines, price formations, um, uh, identification of trend is also very important, equally important. So these are the few things with which like you can make money in this market. And keep one thing in mind, that uh, technicals or technicals is a deal of what? It's a deal of probability. So keep that thing in mind. Nothing is certain. Yeah, one more question is there, that I want to know about books for beginners by Indian author. So I think if you are say like uh, uh, if you really want to read something, and because the very first we mentioned that it's a world of technology, it is better if you log on to one website, that is stockcharts.com. You just log on to that stockcharts.com. You just click on that, you will get the total glossary about the technicals. There is one educational part, you just click on that, you will get the alphabetical uh, uh, this thing description for each and every theory that we use in technicals. Just click on technicals, click on oscillators, and you will understand like how we can how technical works, or how that particular oscillator works, and with a lot of examples, colorful examples. So instead of going into buying some books and all, if you want to understand the basic about technicals, just go first on this website. And if you are say like confident, or if you are say like sufficient with whatever the knowledge that you gain from this, then you can go for some books. But very first to read is the books on candlestick. So candlestick, in my sense, it is very, very important to understand, and you can focus on that. The last one is, which I'm going to take here. The question is, I want to know which fund should I invest in to get in mutual fund, in mutual fund market. I'm conservative investor. Say, uh, uh, to answer this question, if you are say like conservative, then be into mutual fund very first. If you are conservative, then invest into growth funds. And if you are say like aggressive in this market, then go for vision funds. So in vision funds, you can get some beta to your portfolio, because they tracks those stocks in which the story can unfold, the theme can unfold in the long run. And if you want to be a conservative, like if you don't want to lose money in any markets, then be into growth funds. Eventually, they gives us very good returns. And be stick to top companies, top brands, which are there in the market to invest into. So with this, we are winding up this session. If you have any queries, we have given our email address. You can log on, you can send us whatever that your queries on our email address. That's all from my side, and with this we are ending this session. Thank you very much for paying attention, and to be here on say like weekend day. Thank you.